Eric Mwathe after the close, January 14th, 2015, in what was a relatively big down day, with the Nasdaq down at the end of the day, 0.48%. Take a look at the Dow, which was down the most, down 1.06%. You take a look at the S&P 500, which was down 0.58, and the market came off the lows. As you can see, for the S&P 500, the lows were somewhere here at 1988, and it went on to close at 2011. So it did have a nice push into the close. Just want to show you what the charts look like as we go into the Thursday's trading, because I think there is a little bit of confusion. I wouldn't say a little bit, there is confusion as to what this means, and even though the market never gives us a clear sign, just want to show you what I'm looking at, so maybe you can help you make decisions on your end. Now if you take a look at this daily chart, just want to show you something very simple, and we're going to keep this very to the point and not too confusing. Simple straight line there is where the market has been bouncing. And if you can take all the noise out of the market, all opinions, and all confusing factors are always in play in market, you can see that on this S&P 500 chart, every time we've recaptured back above it, more so after uniform activity like there, the market went on to do well. Uniform activity here, the market went on to move higher. You can see uniform activity for this 2-day rally. Remember those back-to-back 300-point gains in the Dow that now look like history? Well, that's where they began, right here, when the RSI bounced on this line. What I'm getting at here is we are back at the line in terms of the S&P 500, the Dow, and the Nasdaq. All of them have the same looking daily charts. So the question becomes is whether this market is trying to trap people to go long or to go short before it actually goes higher. So this market could very easily be trying to get people to go short, and then it decides to bounce to the upside. The Dow daily, just to show you the same looking daily charts there. In fact, the Dow can even go a little bit lower. The Dow can even afford to go lower and still finds support on this line eventually. So just not sure that this is a broken market yet, because if you take a look at the weekly, we see some signs of, yes, the market is pulling back. And yes, I can see the argument, and I've made the argument myself, that this is a broken market because of this negative divergence line and this most recent negative divergence line. So I can see that argument that yes, we've seen major highs, and in fact I've been talking about the possibility that this could be very serious highs. Now, even though that is true, what I am trying to say here is I haven't seen the break yet in the smaller time periods, and that's really what's confusing. In fact, I've been saying for a while that if you take a look at the daily for the markets, the way they made the most recent high was bearish, and that could become a problem because we are sitting now off the highs, and when we look at the previous highs here, those highs came with declining RSI strength. And even this most recent high, I had mentioned that it is not unlikely that the market could find support there on that resistance line on the daily RSI, and that seems to have been enough resistance to bring the market lower after those back-to-back 300-day days on the Dow. Also, what I'm trying to say here is we made a lower low here while making higher highs in price, and yet we did not move above 61.8 on the daily RSI, and I think that to me is a major red flag. This could be a problem. Whoops. Could be a problem in the market. This negative divergence area could suggest that maybe eventually we do break all short-term support levels and the market moves lower. Want to show you the daily, the hourly. because the hourly is showing, and I did mention this earlier, that if you take a look at the hourly, let me bring one from my charts that I've saved. On the Dow hourly, just want you to take a look at simple development here on the hourly chart, and the green line on the RSI is where the market has been finding support, and I did mention this earlier. So this green line is where the market has been bouncing. I don't have to show you all this, but if you can pause the video and take a look, you'll see that this is where the market has been finding buy points to the upside. Every time the market recaptures that zone, we move higher. And recently we had uniform activity back above to the green line, and now we are bouncing on the green line. This could easily be support territory. Don't forget, on most markets you'll see that they are testing the prior breakout, and I'll use the Dow, but if you take a look at the weekly chart and the daily and even the hourly for the Dow, Nasdaq and S&P 500, connect these highs going back to September, draw a straight line, which is you see that the market has been coming back. After going below that, it seems to bounce immediately. It did so here, and recently over the last couple of hours it did so there. So there's a lot of support in the market internally, so that's why I keep saying I'm not sure that this market is broken. Let me bring a chart that could also help us understand what's going on, and it is a chart. We begin with the daily chart for the VIX. You can see where the VIX has come back on the daily RSI. It's back to where it's been stalling. So if the VIX cannot move above that line, then I would assume, or we can assume, that this is where it stalls. So that's the view on the daily. It's been stalling on this line for quite a while. In fact, if you go back all these areas here, every time the market would stall, the market's been making lower lows. So I don't see how this is going to be different if the market itself is coming back to the same RSI area and stalling. It also moved back below that line there and stalled, which is this high. So now that we're here, the market does need to prove itself by trading above that line if it's going to rally and push the market lower. Otherwise, the way we closed on Wednesday, looks like this could be a trap, and the trap could be that the market actually wants to go down and the VIX is setting up to go lower. If we take a look at another view, which is the hourly, and maybe the hourly will give us an insight into what's going on internally. So for the hourly, for the VIX, let me see whether you can see that it's been stalling on the red line on the RSI. Most recent stall goes back to this double top and a move back below the red line, which was these highs, and the market was a buy at this time. And we can see that over the last couple of hours on Wednesday's trading, the market hit that level, which is the highs, and into the close the VIX did show a pullback in price, confirming that the RSI is again showing resistance on the same level. So we can conclude here that if the VIX does not move above the red line and continues moving lower, then the market is going to be ready for another bounce short term. I know it's confusing. Yes, the dailies and the hour and the monthlies are not looking great. In fact, let me share with you two charts, just two charts for the sake of wrapping this up, and it is take you to Europe. I'll show you the FTSE. Well, if I can find it, maybe I will. All right, or maybe not. All right, let's take a look at the monthly for the FTSE. As of Wednesday's close, of course, we haven't closed for the month, so we should not really rush to make strong decisions based on this. But you can see that on the monthly for the London stock market, we are back below 50. And that asks the question, is what this means. This opens up the possibility for a major down move down the road, just like every time we've moved below 50 over the last 10 years or so, we've been setting up for a major drop in world markets. Even here in 2000, before we set up for major move in world markets, the excuse at the time in the US was because of the dot-com bubble burst. Here it was because of the financial crash. Now that it's moving below 50, you wonder if it moves down what the excuse is gonna be. Anyway, that's how it looks like on that front. Just want to mention one other market, which is the one that has been leading the markets higher, and it is India. And I look at the Indian market on a weekly RSI time frame, and you'll see that it needs to hold the line of defense on the, see whether I can get that to show properly. All right, you can see that it needs to hold the line that it's been showing support on the weekly RSI. Above that line, it should still be able to bounce, which also happens to be the prior breakout level, and that breakout was responsible for this move above that high on the RSI, a move above that high in price, which was very successful in launching the stock to a great run. And so we've been saying that just draw another straight line above those two lines. The Nifty and the Indian market should be okay, but if they break those two lines and trade lower, then we might be in a new phase in the market where pullbacks are gonna be the norm. Eric Muade, good luck, peace, and blessings. Woo!